Imagine waking up every morning knowing that your money earned you money while you were sleeping. No side hustle, no trading stress, no crypto roller coaster. Just quiet, steady cash flow rolling into your account every single month. Sounds like a dream, right? Well, in 2025, that dream is more achievable than ever thanks to dividend exchange traded funds. These investments are like financial machines that quietly build your wealth in the background. They don't need constant attention, they don't care about daily market drama, and they pay you to stay invested. So today, we're diving deep into the top 5 dividend ETFs for 2025, the ones that could help you create real passive income without the headaches of individual stock picking. But before we jump into the list, let us make sure you truly understand what makes dividend exchange traded funds so powerful. A dividend exchange traded fund is a collection of dividend paying companies packaged into one simple investment. Instead of owning one stock like Coca-Cola or Apple, you own dozens, sometimes hundreds, all at once. Each of those companies pays dividends, and the exchange traded fund passes those dividends on to you. So you are getting steady income, automatic diversification, and peace of mind all in one move. Now let's break down the top 5 dividend ETFs to watch in 2025 and why investors are so obsessed with them right now. Number 1, Vanguard High Dividend Yield Exchange Traded Fund, ticker VYM. This is the king of consistency. Vanguard's VYM focuses on large, established U.S. companies that have a proven history of paying strong, reliable dividends. We're talking about businesses like Johnson & Johnson, JP Morgan Chase, and ExxonMobil, the giants that rarely miss a payout. In the year 2025, with market volatility still a concern, investors are flocking to VYM for one big reason: stability. VYM's dividend yield typically hovers around 3 to 4%, which means you can expect solid, predictable cash flow. And with Vanguard's famously low fees, you are not losing profits to management costs. This ETF is built for long-term investors who want peace of mind and growth over decades. If you could own just one dividend exchange-traded fund and hold it forever, this would be it. Number 2, Schwab US. Dividend Equity Exchange Traded Fund, ticker SCHD. If there's one ETF that dividend investors can't stop talking about, it's SCHD. This fund doesn't just chase the highest yields, it focuses on quality. That means companies with strong financials, steady earnings, and a consistent history of dividend growth. Think of SCHD as the disciplined investor's dream ETF. It's filled with businesses like PepsiCo, Home Depot, and Coca-Cola, companies that thrive in both good times and bad. Over the years, SCHD has delivered excellent total returns, often outperforming other dividend ETFs thanks to its smart strategy. In 2025, with inflation cooling and interest rates normalizing, SCHD continues to stand out for its balance of income, stability, and growth potential. If you want your dividends to grow over time, not just stay flat, this ETF deserves a top spot in your portfolio. Number 3, iShares Select Dividend Exchange Traded Fund, ticker DVY. Now, this one is for the investors who love high income. DVY targets U.S. companies that pay generous dividends, often from stable sectors like utilities, energy, and manufacturing. Its yield tends to be higher than most others, making it a popular choice for retirees or anyone who wants to boost their passive income stream. In 2025, as the economy stabilizes after years of uncertainty, high dividend sectors are expected to stay strong, and DVY gives you exposure to them all. The best part? It spreads your risk across about 100 solid dividend payers. So you are not relying on one company's performance. You are collecting checks from a whole lineup of businesses. Just keep in mind, higher yield can come with slightly higher risk. But for income-focused investors, DVY remains one of the most rewarding plays out there. Number 4, SPDRS and P Dividend ETF, ticker SDY. If you want to invest in companies that treat their shareholders like royalty, SDY is for you. This ETF only includes companies that have increased their dividends for at least 20 consecutive years. That's 2 decades of discipline, resilience, and commitment to paying investors, even through recessions, market crashes, and pandemics. Owning SDY means you're aligned with America's most consistent wealth creators. These are the companies that not only survive economic storms, they come out stronger. In 2025, SDY is one of the best ETFs for long-term investors who want slow, steady compounding wealth without sleepless nights. Because when a company has raised dividends for 20 plus years straight, it's a sign they know how to manage money. Number 5, Invesco S&P 500 High Dividend Low Volatility Exchange Traded Fund, ticker SPHD. SPHD is perfect for investors who crave income but can't stand wild price swings. It combines two things most investors dream of: high dividends and low volatility. This ETF picks 50 stocks from the S&P 500 that not only pay strong dividends, but also have historically shown less price fluctuation. That means you get smoother performance and reliable monthly income. Yes, monthly. SPHD actually pays dividends every month, making it ideal for investors who love regular cash flow. In a world full of uncertainty, this ETF gives you the confidence that your income is both high and stable. So now you know the top 5 dividend ETFs for 2025. But here's the real question: how do you make the most out of them? Because the secret to growing wealth with dividend exchange-traded funds isn't just owning them. It is reinvesting the dividends. When you reinvest your dividends, you buy more exchange-traded fund shares, which means your next dividend payment is slightly bigger. Then you reinvest that again and again. Over time, this creates a snowball effect that turns small payouts into serious wealth. That's the magic of compounding, the eighth wonder of the world, as Einstein called it. Let's take an example. If you invest $10,000 into an ETF with a 4% yield and reinvest your dividends, you could have over $22,000 in 18 years without adding another dollar. But if you keep investing regularly, say $200 a month, that could easily grow into 6 figures, all from the quiet, steady power of dividend exchange-traded funds. And the best part? They don't require constant trading or market timing. You don't have to guess which stock will explode next or when to sell. You just buy, hold, and let your money do the work. In 2025, dividend ETFs are especially appealing because the markets are still uncertain. Some investors are worried about inflation, others about AI disruptions or rate changes. But one thing remains true: people still buy food, power their homes, use banks, and shop at stores. And the companies behind those essentials keep paying dividends. That's why dividend investing works. It's grounded in reality, not hype. It rewards patience, not panic. And it helps you sleep peacefully knowing your portfolio is working hard, even when you are not. If you are a beginner, start simple. Pick 1 or 2 ETFs like VYM or SCHD. Set up automatic investments every month. Reinvest your dividends. And forget about the day-to-day noise of the market. Over time, you will see your portfolio grow, not just in size, but in reliability. Because building wealth isn't about luck. It's about consistency. And dividend ETFs give you that consistency. So whether you are saving for retirement, trying to build financial freedom, or just want your money to stop sitting idle, dividend exchange-traded funds are one of the smartest, safest, and easiest tools out there. They let you live your life while your investments quietly compound in the background. They're not flashy. They don't promise overnight success, but they deliver year after year. So now the question is, which one will you choose? The steady reliability of VYM ? The powerful growth of SCHD ? The high yield of DVY? The proven record of SDY ? Or the smooth income of SPHD? Whichever you pick, the most important thing is this: start now. Because the earlier you start, the longer compounding can work its magic. Your future self will thank you for the decision you make today. If this video helped you understand dividend ETFs better, make sure to hit that like button, subscribe for more smart investing insights, and share this video with someone who wants to make their money work smarter in 2025. Remember, wealth isn't built by timing the market. It's built by time in the market. Stay invested, stay patient, and keep your money growing one dividend at a time.